Market news now. Asian equities were mixed on Tuesday as investor attempts to track gains in New York were weighed by a perfect storm of issues that have hammered global markets, while the pound remains stuck around 20-month lows on Brexit uncertainty. Bargain buyers tried to step in after the latest sell-off but were unable to gain traction, with fears about the outlook for the global economy keeping sentiment beaten down. All of this added to the Indian Reserve Bank governor's resignation brought a mixed picture across the board, with the Nikkei dipping 0.33%, the Hang Seng ticked 0.2% higher, while the Shanghai Composite was 0.4% higher by close of trade. US stocks ended a volatile session slightly higher on Monday, helped by gains in technology shares. The uncertainty over Britain's exit from the European Union kept investors on edge about global growth. The Dow Jones Industrial edged up 0.1% to 24,420 points. The S&P 500 was up by a similar margin to close at 2,637, while the Nasdaq added 0.75% to 7,020 points. For more on the markets, we cross to Arabile Gomede, who's standing by at the Johannesburg Stock Exchange. Are we also seeing a mixed picture at the JSE?
Yeah, well, actually, it's not a mixed picture if you were to look at it, Nzinga. Yes, a few stocks certainly in the red, but overall, South Africa's market is up over 1% today. So, and thus far, of course, that's just at this moment, nearly 1:30 or so. So it is an interesting picture to look at, and I think a range of issues are certainly happening. We've crisscrossed between a negative and a positive, but certainly the key element was perhaps for investors surpassing that 50,000 point mark or getting below that mark. I think would have been very critical. We're still hovering above it, and right now still hovering just below 51,000 points. So certainly a good measure there. The likes of Naspers flowing a little bit better, and that comes from Asia having seen a little bit of green despite the mixed picture as well coming out of there. So quite a lot to unpack as well, with a whole host of news having come to the fore locally and internationally. But for now, let's unpack the European and local market. As I said, a whole lot to discuss, so let's get right into it. Martin Harris from IG South Africa joining me as we unpack the market picture. Martin, thank you so much for your time. Really appreciate it. A 1% gain for the JSE. We've seen this picture before. Is it something to write home about?
Thank you, Arabile. Is it something to write home about? Probably not. A bit of a relief rally, particularly led by Naspers. We see Naspers climbing up 3.5% today. Positive news out of China that they're looking to form a regulatory board for Chinese gaming. So with Naspers, their Tencent holding, a lot of their revenue comes from mobile games. China put a halt on new releases of mobile games to try and stem gaming addiction in children, among other things. And looks like they might start to relax on a few of those things now that a committee's been formed. So positive for Naspers. Also, we had the rebound in US markets yesterday. Tech companies in particular, we saw Facebook up just over 3%. They announced that they're going to be buying back some shares from the market. So Facebook up heavily, Google was up, Apple, and so really positive day for the United States. Actually, it opened weaker and was weaker for most of the day. And then late session, a bit of a rebound. And so that's really what has had the knock-on effect onto the international markets as well as South Africa. So are we saying the sustainability of this is perhaps not there? Do we continue to see a sustained rally headed towards the end of the year? It's dependent on what happens now in the United States with the rate hikes. So their federal committee, I think in 8 days' time, 18th to the 19th, so on the 19th we'll get an announcement on what they're going to do with their interest rates. Their interest rates have been top of the news globally because they've got near to or already inverted yield curves. Essentially, the near-dated bonds, the yield is higher than the long-dated, the 10-year. And when you get all of them, 1 year, 2 year, 3 year, all higher than your 10-year, it's bad. The idea is that they've increased rates faster than the market could absorb, and they don't expect, or the market doesn't expect, long-term growth to be particularly high. So if they raise rates, could signal quite a bearish sort of sign. If they decide not to raise rates, we could have a bit of a rally in the United States and extending globally.
Let's bring the Brexit issue into play here now, and that's bound to shake up world markets, not just South Africa, right? It's a heavy situation which has severely impacted the rand as well against that British pound.
It has. It's quite a confusing situation. So much keeps happening and changing, yet things stay the same in the UK. Really, what I understand is that you've got UK politicians who are against the EU rules placed into the new Brexit plan, and so they don't want a EU plan, they want their own plan, and so they're rejecting the current one that's been proposed by May, which has been drafted in negotiations with the EU. What we saw there, we saw UK markets come off a little bit towards the end of the session when that news came out yesterday. We saw the pound weakening against the dollar, but the rand has weakened quite significantly against a basket of international currencies, and so we typically would have strengthened against the pound in that environment, but we actually saw the rand coming off, not so much because of Brexit, but because of weaker rand sentiment due to our bond yields. We've got a very difficult debt situation with Eskom, and the South African government look like one of their options is to pay or take on the debt of Eskom, meaning that the state or the taxpayers then pay for the Eskom's debt. That will then save Eskom. Eskom are currently rated at 4 levels below junk status on their bonds, so it's not even investable for majority of companies around the world or sovereign debt funds even. And so if the government step in, they take on the debt, it's bad for South African government yields, government bond yields, meaning that we've got investors pulling out, and so the yield increases. They have to reduce the price that you can pay because of the supply and demand. So that increase in 10-year yields, I mean, we've now got the South African 10-year yield against the US yield. The spread, the difference between the two is now the widest it's been, I think, in a couple of years. It's about 6.22%, and that has really badly affected the rand. And so we've seen the rand now move from 13.50 last week up to the mid-14s.
It has gotten slightly better to 14.34, but it's neither here nor there, to be really honest. But here's some, perhaps bring it a little bit more locally, factors and economic data to have come out. We have quarterly employment statistics, employment decreasing by 16,000 quarter on quarter. Fact of the matter is, it doesn't matter what the number is unless it's below 20% with regards to unemployment as a whole. We're still not creating the jobs we need in order to push this country forward.
Unfortunately not. I think that there's still a lot of policy uncertainty, and until we get some really aggressive jobs policies in place, we're not going to see those changes, and that those jobs policies will need to look at tax reform and the like. Big issue again is energy. If we had cheaper energy, if we had a stable supply and so on, we could see that increase in jobs. A lot of people aren't looking to invest at the moment because we have a iffy energy situation in the country.
Also then, mining production increasing by 0.5% year on year in the month of October. One would have hoped that with the completion of the mining charter, perhaps we begin to start getting some investment into the nation with regards to mining. Do you think that that's still to come? Do you think that perhaps it is still early days and at least it's positive for now?
I think a lot of the mining production is due to extraneous factors, and so we've got low global commodity prices. Barring gold recently has had a bit of a run, but we've got low prices globally due to weak global demand, and it's part of the sort of global economic slowdown. And so that's why I think the costs that have increased in South Africa, labour and energy costs, cost of fuel, that has made it sort of a unfavourable environment for miners, and so they've scaled back production to cut costs. They don't have the cash flow to sustain the current situation. I think as soon as we see increased global commodity prices, we'll see the local guys coming online again.
We've also had manufacturing production increase by 3% in the month of October. So a whole slew of economic data having come out. The largest positive contributors to that manufacturing data coming out as food and beverages, contributing around 1.7 percentage points to the overall data there. But Martin Harris from IG South Africa having joined us to unpack that market picture a whole lot more. A lot really happening across the board here when you take a look at that market picture. But we'll continue to unpack it here on SABC News. For now, that's where the buck stops. It's back to Nzinga in studio right after this.